All right, we're back with you and keeping a close eye on the market action today. I'm Marlon Bowling, and I'm joined by Ted Seifried of Zaner Ag Hedge in Chicago. I want to go right to Ted and talk with him about the market movement today. Kind of weird dynamics going on. We had a higher trade overnight, and then we had the opening bell, and, you know, it's been downhill ever since the opening bell rang. I just wondered if you have heard anything on the wire or what is causing the market to kind of fall out of bed on the grain side here.
You know, not really anything news from the Ukraine-Russia front that I've seen anyways. But, you know, for one, export sales for wheat were really poor. And in a climate like this, you really want to see these better export sales, and you're just not getting that. You also had a technical reason to kind of break, right? I mean, wheat closed right on its highs yesterday. It followed through in the overnight session, but it got above the 200-day moving average once again, and then kind of pulled back. Now, this is the second time we've tested that 200-day moving average. The last time we did it was mid-June when we had the row crops rallying on weather concerns. And, you know, it's going to be a really tough level of resistance to crack, right? And so now we're going to really find out if this trouble with Russia and Ukraine and the lack of the Black Sea deal, if that's going to be a lasting rally for wheat, or if it was just a rally to resistance and then a failure again. So again, today and tomorrow are going to be a big test for wheat. I'm not exactly sure which way this goes, Marlon. What I'm going to say is that, you know, it occurs to me with the Ukraine being at the end of their marketing year, just like us. I mean, it's the same marketing year we have. There's really not a whole lot for the Ukraine to be shipping between now and, say, October. Now, this is more corn than it is wheat, but they have shipped a lot of product, and a lot of it's actually gone to China, by the way. And you do wonder if by the time they're getting into harvest and when they would traditionally be restarting their export program for the next marketing year, if maybe some deal does come in place and possibly negotiated by China. So, you know, I don't know. We had all of the fireworks, you know, literally speaking, happening. You know, I mean, Russia continues to attack the ports, the two major ports in Ukraine. So we've had all the fireworks. Now the question is, what will be the lasting effect? And really, is it something that we should be worried about for the next month and a half to 2 months, or is it something that's a longer-term problem? And I think the market's trying to figure that out right now.
Let's take a look at what's going on in this corn market here. Our quotes are from Bar Chart. On the September contract right now, you know, we had a high last night of 554.5, and now we're down to 536.5. We're a penny from our low of the day, and we're down 9 cents from our close yesterday. On December corn, we're now down 8, now down 7 3/4. At 545.25, that would put us about a penny from our low of the day there, off of our overnight high by 18 cents in that corn market. So we're really sliding away. In soybeans, we have turned that thing around, and September was up to 14.42 last night. Now we're at 14.21, so we're down 11. Things really look differently now than what they did here a few hours ago. November down 9 3/4 at 13.99. Whoops, we lost that 14 handle on November soybeans right now. And then Ted was just talking about the wheat. Let's go there. We have the December contract. This would be in Chicago at 7.43 per bushel. That is down 2.5 cents. And we had a high last night of 7.68 3/4. Yes, that's right. We are off of that by 25 cents right now. In Kansas City wheat, you have the December contract a nickel lower at 8.67.5. It had been flying pretty high up to 8.96 3/4 in the overnight trade. So now we've trimmed off almost 30 cents off of that. In spring wheat trade, you have that December contract now 3.5 lower at 9.02.5. How about cotton? What about December? Well, here we go with December now 54 points higher at 84.29 per pound. Ted, when you have market action like this, it makes it hard for producers out there to pull the trigger on their marketing. If they have maybe some grain left in the bins or something, they've been waiting for a rally. This is their third chance now, a third rally here in the last month or so. I don't know how many chances everybody's going to get, but do you recommend maybe adding to some sales on this rally, or are you willing to be more patient?
No, absolutely, Marlon. You know, 560 has really been the target since April, right? And, you know, we were there in April. Like you said, we slipped way below it. We got back there and then some in the middle of June, and now we're finally back there again. You have to look at this from a standpoint of you very rarely get the double dip weather rally, right? So, yeah. And also, you've got a lot of technicals telling you things, right? corn failed at yesterday's high and came off. Yes, it closed higher on the day, but well off of the highs. We tried again in the overnight session. We failed. That 563 level was a big level of resistance. Today, we are holding our 50-day moving average, which was sort of the scene of the crime when we broke out above it yesterday. But if we break this 50-day moving average, it's probably suggesting that the rally is over for now. So, yes, you really need to be looking at ways of yes, old crop, but I'm really looking more at new crop. I'd like to be upwards of 55% sold on new crop. I'm okay with reownership strategies, although I'm not twisting anybody's arm on that. But yeah, this is, if you didn't take advantage of it last time, which most people didn't, I heard a lot of people, really upset that they hadn't. This is the time you have to do it, right? I mean, if you don't cry about it later.
Well, and when you have a weather rally like this, they only have a limited time where they actually run. And like you say, this is our second phase of it here. They're predicting kind of hot, dry weather in parts of the Midwest here, maybe through the end of July. But that's when the market reacts to it, when they're talking about it. If it actually happens, it's going to be old news by then, right?
That's right. Marlon, weather markets end, one way or the other. At some point, weather doesn't really matter anymore. For corn, that's going to happen in about 10 days. Well, not completely, but I mean, we'll get through the vast majority of pollination in the next 10 days. So I don't think that forecast could get worse, right, than it is right now. So if we are not making new highs by the end of the day today, you have to worry that forecast only gets better by the time we come in next week. So again, you have to be real careful about your expectations on this second attempt at a weather rally here in corn. And again, at some point, the market will start talking the supply side of things. That's not going to be a good conversation for corn, okay? In the midst of a weather rally, we kind of forget about those sorts of things, but that conversation will come back. And when it does, it's not going to be a good one for corn.
Yeah, and we all know how USDA had their last quarterly stocks report. Okay, we'll talk about the livestock trade here in just a little bit. We're talking with Ted Seifried. We'll be right back. Now we focus on livestock. Thanks for joining us today. It's a busy Thursday. Here we go on the live cattle board. Our quotes are from Barchart, and we have August $1.45 higher now at 182.77. Well, look at that. That's over $1.50 off of our earlier low this morning. We're 20 cents from our high. October live cattle up $1.72. The biggest gain is in December. It's up $1.95 right now. On the feeder cattle side, you have August $2.27 higher at 249.07. Boy, somebody released the dogs here. We have October on out, everything over $3 higher on feeders today. So there they go again to the upside. Let's look at lean hogs. We have August up $2.75 at $100.67. Man, it just leapfrogged right over that $100 benchmark. It got as high as 101. October up $2.72. Ted, what's going on here in the livestock trade today?
Yeah. You know what, Marlon? The feeders are the leaders. You love to see all that strength in feeder cattle. In fact, we are flirting with the idea of going to push into new highs there for the August feeder cattle. And live cattle very much are doing that. October live cattle up at new highs. Yeah. 185.50, really? Wow. If we close up here, this is definitely a contract high close. I've been hearing a whole lot of people, a lot of analysts saying that, hey, this is the time where the cattle market could top out. Or at least be due for a pretty major correction, because this is the sort of time frame where box beef prices cool off, therefore packers' margins get tighter, possibly lower cash trade, so on and so forth. But until we see some sort of confirmation on the chart or a real big confirmation of quite a bit lower cash trade, I just don't think you can fight this trend. I mean, this is an upward trending, this is a bull market, has been for a while. We know there's bullish fundamentals behind it. We're not done trading that yet, Marlon, and we continue forge higher. A big gold star for the hogs today, because a really nice rebound. This will be the highest. Well, if we can close up here in hogs, and again, it's a long day, so let's not get too excited yet. But if we can close up here in hogs, hey, this is the highest close that we've seen since April. We've shrugged off all of the concerns at this point. So we really like what's going on in hogs there as well.
Great points. Thank you, Ted. I appreciate that very much. Big rebound in livestock today. Ted Seifried of Zaner Ag Hedge with us from Chicago.